Now, we will be discussing the auditor's report, and that auditor's report which is addressed to the shareholders, the owners of the entity, and this is the report which goes in the hands of the lot of stakeholders. And these reports can be, it is not a restricted report, it can be used by anybody who are interested in that company. They are investors, they may be the bankers, they are the tax authorities, they are the creditors, they are the debtors. So anybody can use that reports because no restrictions of the use is there in that report. And this is the final product of our audit process, final product. And when we talk about the final product, certainly that final product, your performance as an auditors, your impressions as an auditors, the society view of how he rate the auditors will be judged from your audit report. And therefore, the auditors has to assume and has to realize the importance of it and has to assume a lot of responsibility. When he reports under SA 700, 705 and 706, these are the three standards of reporting. He has to assume a lot of responsibilities. He has to always realize that he has a lot of responsibilities because there is a expectation, lot of expectations by the users on these reports. By his report, the lot of people have got a certain expectations from his reports, and therefore he cannot take it as casually. Whatever lines he writes on those one, he has to take it very seriously because the user is relying on those linings, on the reports, and on the ultimate opinion. So it's a matter of responsibilities, right, rather than matter of right. And therefore, we have a auditor responsibilities clause there also. Do you understand? When we talk about the audit report, we have three standards on it. SA 700. This is the form and contents of audit reports where there is no modifications in the audit reports. Modification is done when there is a qualifications or you want to add something to the standard audit reports. So SA 700 is for those, is used at the time when there are no qualifications in the audit reports. It's a clean report and there are no other matters you want to communicate to the shareholders or to the user of the financial statement. Other matters may not be a qualifications, but you want to communicate them by some other matters. Then means you have to modify the standard format of the audit reports, and that is called a modifications. So in SA 700, there is a form and contents of the audit reports, and this audit reports is a clean report. 705, SA 705 and SA 706, both are the format of modified report. Modifications in the standard format of audit report may be on account of qualifications, maybe on account of other matters which the auditors want to communicate to the user of the financial statement and user of the audit report. Those matters are not a qualifications, but they are the other matters which the auditors feels that he should communicate to the readers who are using this report. But that is a modified report because we are modifying the standard format of the audit reports. So simply you can say that SA 700 gives you the format and contents of the audit report, which is clean one, SA 705 and 706 gives you a form and contents of the audit report which are modified. SA 705 is of qualifications. SA 706 is not a qualifications. Modification is not on account of qualifications, modification is on account of other matters. So, how do you start with the SA 700? What's the objective of this SA 700? Dear student, when you are doing your auditing, you must have, at the time of last when you prepare an audit report which is addressed to the shareholders, you know the contents of it. But you might have not seriously thought of each and every line you write on your report. We will be discussing those contents, how important it is, what do we want to communicate, how the other people reads that report, and what expectations in the user's minds is there about your reports. So we have to feel a responsibility. We have to assume a lot of responsibility when you are making your final product in the form of audit report. That final product should not contain any defects. If it contains as like a product which you are marketable product you are selling in the market, that may not be sellable, then you will not fetch that much of sale. In our case, we are not selling this report, but people are using this report, and people who are using our reports, if it has got some defects, the basic objective that the people rely on a report, they may not rely on it because it has a certain defects. It does not fit in within their expectations. So the SA 700 has prescribed a certain format of the audit reports, and that format, the basic objective of that format is, what is the purpose behind it? So that we make our report as transparent as we can. We tell to the people what we have done, how we have done the auditing, and what conclusion we have derived, and how we derive that conclusions. This whole process we have to explain to our user of the reports. Dear student, as it is your final product, and there are users of this report who have a great expectations from this report, and therefore there is an expectation gap also. They expect very much from this report. You may not be able to satisfy their expectations by this reporting because of there are certain limitations of the auditing. And we will be trying to build and to fill up this expectation gap by explaining certain thing in the report. We try to fill up that expectation gap. The expectation of the people is that when the auditors sign the financial statement and when he reports, their expectation is everything is okay in the financial statements. And that expectation is not true. That is over expectation of the users from the auditor's perspective. They say that it's a guarantee from the auditors that the financial statements are free from material misstatement, frauds, everything, company is functioning well like this. But this is not the case. Auditors has got a different subjects and different scope for auditing. People think that once the auditor signs the balance sheet and in financial statements, everything is okay. No, it is not so. That should not be expected from the auditors. But the question is that how to bridge the expectation gap of the user of the auditor's report and what actually auditors does, what function he performs, and how much of assurance he gives to the user. We try to explain it through our audit reports so that mismatch of expectation can be bridged. That's the objective. And the objective of the SA 700 is, the objective of this essay is to establish a standard on the form and contents of the audit reports. How the auditors should report to the shareholders of the company. What should he write in his audit reports? How he should write? What should he covers? So, this form and contents of the audit report is given in SA 700. Form an opinion on the financial statement based on the evaluations of the conclusion drawn from the audit evidences obtained. Auditor's ultimate audit objective, just like when we explained and discussed the SA 200, overall objective of the audit is to express an opinion on the financial statements, whether financial statements are true or fair or not. That opinion is expected from the auditors, and that's the overall objective of the audit. So, such type of opinion must be there in the forms and contents of the audit reports. Express clearly that opinion through a written report that also describes the basis for opinion. If you describe that how you form this opinion, that the financial statement shows the true and fair view, and if you just put only one line in your report that financial statement shows the true and fair view, perhaps there may be a questions in the mind of the users, how the auditor writes that financial statement true and fair view, what he has done, how he arrived this conclusion. There may be certain questions in the background. And because of this question, the reliability of the auditor's reports will be under cloud. Just to eliminate that one. That everybody relies on the auditor's report to strengthen the credibility of that auditor's report. This contents, the forms or contents of audit report also explain you that how he arrived this conclusion that this shows the true and fair view. If the auditor explain that process also, that will give a more confidence to the reader and to the user of the audit report that yes, he has performed a certain procedure. It is not that he just saw the books of accounts and then he issues his opinion. His opinion is based on his hard work he has done. And that gives a more confidence to the users that yes, this opinion is okay. He can rely on it. So that's the audit report, that's objective. The opinion expressed by the auditor when he concludes that the financial statement have been prepared in all material respect in accordance with the applicable financial reporting framework and does not express any reservation, qualification while expressing this audit opinion, it is an unmodified opinion. And if he modifies, express certain reservation, certain explanation, certain qualification, it is a modified opinion then. So it is an unmodified opinion. SA 700 talks about the forms and contents of the audit report, which is unmodified. You see, the ultimate objective of the audit is to express an opinion by the auditors. Now, what is that expression on opinion? The auditor shall express an unmodified opinion. Unmodified opinion. When auditor concludes that the financial statements are prepared in all material respects in accordance with the applicable financial reporting framework And if the auditor concludes that based on the audit evidence obtained, the financial statement as a whole are not free from material statement, or is unable to obtain a sufficient appropriate audit evidences to conclude that financial statement as a whole are free from material misstatement, the auditor shall modify the opinion. Means he should qualify his opinion. So the question is that expression and opinion, ultimate objectives of the auditor is, or audit is, the expression and opinion about the true and fairness of this. And if he is unable to do it because he feels that after examining, following that total audit process, you have a process, planning, field work, and after that, whatever the audit evidences you collect during that planning and the field work, auditor is of the opinion that yes, he can't express the unmodified opinion. He has to modify his opinion. He cannot issue the clean report. Then he has to modify his opinion that SA 700 says. Then he will issue the report as per the guidance given under SA 705. Dear student, what is there? What is there in the contents of the audit report? The audit report should be in writing, should contain the following elements. Means the audit report has to be in writing. It should not be oral. It should be in writing, duly signed by the auditors. That's what the SA 700 says, and certainly only then it can be said, it can be communicated to the users. Now, what should it contain? First, it says the title. What is the title of the auditor's reports? What is the title of the auditor's report? Title of auditor report is, if you have observed that last year there was a certain last a certain modification in these titles. We were generally writing auditor's report. The title, auditor's report. But now we are writing the title, independent auditor's report. Independent auditor's report, that's the title of the audit report. You must be feeling that what's the difference between the auditor reports and independent auditor's report? And what is the use of writing an independent auditor's report? Everybody knows that the auditor has to be independent. It has to comply with the regulations which makes it independent. That prescribes the qualifications of the auditors to make him independent. And that's a basic ingredient of the audit. Everybody knows it. You can't appoint an auditor who is not independent. That's why the law says that the auditor should not hold the shares of that company, should not have a debt to that company, he is not indebted to the company, he is not an employee of the company. These are some of the legal requirements which are only just to ensure that auditor is independent. But dear student, there are more other ethical requirements. In addition to the legal requirement, there are so many other ethical requirement, regulatory requirement under the Chartered Accountants Act and some ethics prescribed in that act to make him more independent than what the law says. So the title, why we write an independent auditor's report? Because if you are independent, communicate it. That become a more transparent. To bring a more transparency in the audit report, that is an independent auditor report, and that will give a more independent, more confidence to the reader of the financial statements and your report. So title of the report is independent auditor's report. Now there is an introductory paragraph. Introductory paragraph. What do you write in the introductory paragraph? Dear student, you have a format given in SC 700. You can read that one, and otherwise you are very familiar with this format. Every time, every year you report in that format. And it writes, we have audited the financial statement of these companies, XY Limited, for the year ending so and so. So you are saying, you are giving the introductions. We have audited these financial statements of these companies. Which companies? You are identifying those financial statements which you have audited. So you are giving the introductions. You are giving that introductions. And those financial statements have been prepared as per certain financial reporting framework. So there is a certain introductions to that. We have audited it, we have identified those financial statements, and that's the introductory paragraph. The management responsibility for the financial statement. There is a second paragraph which talks about the management responsibility. And sometimes you again wonders that what is the need of writing these all in management responsibility in that audit report. It unnecessarily makes the lengthy this report. That's the one argument, and that's the one part. But as I told you that this is the communications and the report from the auditor's side, and that is used by anybody, the shareholders, investors, and the tax authority or anybody that financiers, and therefore to explain them, to make the report more transparent, so that everybody knows what is the responsibility of the management, what is the responsibility of the auditors, and so that the expectation gap between the expectations of the users and what the auditor actually has done and how he is reporting under what circumstances, that is explained to the users. So that's the reasons why this statement is given, the management responsibility for the financial statement. In that, what the auditors writes that the responsibility of preparation of this financial statement as per the Schedule 6, if it is a case of a companies, as per the regulatory requirements, is of the management, and management is responsible for this financial statement. And dear student, when we write this in the management responsibility, that these are the responsibility of these financial statement, which consist of profit or loss, balance sheet, and the cash flows and the notes to the financial statement, is the responsibility of the management. So for that purpose, we take management representations from to support this statement, we take a management representation under SA 580 from the management, that they acknowledge the responsibility of this financial statement. They also write in the management responsibility in this paragraph that management responsibility is not only they are taking the responsibility of this financial management, but their responsibility also to maintain an internal control and the effectiveness of those one, and to design and implement the internal control is also the responsibility of the management. So that's the management responsibility. It should be known to everybody who reads the auditor's report what the responsibility of management is. Sometimes there may be a confusion that once the auditor signs, then it is the responsibility. Some people think that the users think that if he is signing the balance sheet and profit and loss statement, it is the responsibility of the auditors, and therefore it has to be clearly explained through the report that these financial statement which has been prepared, these has been prepared by the management. Auditor has no responsibility of this financial statement. Auditor responsibility is mentioned in the auditor responsibility paragraph. Auditor responsibility is what please see what is the responsibility of the auditors. So sometimes that confusions which are in the mind of the user, that the response, once the auditor signs, it becomes the responsibility of the auditors also. No, it is not so. And just to explain that one, it is written there. Even the auditor signs it, he signs in terms of his audit reports. He is not signing because he is taking the responsibility of those financial statements. He is signing the financial statement because he is identifying the financial statement just for identification, that these are the financial statements on which my report is there, on which I am expressing the auditor's opinion. So, just for identification, the auditor signs, and therefore, wherever he signs, he writes in terms of my audit report of event date attached. So, I am signing, please refer my audit report, why I am signing these financial statements. So, clearly the management responsibility is defined. At least, whosoever reads this audit report, he knows whose responsibility is the financial statement. Now, after that, there is an auditor's responsibility. In the auditor's responsibility, he defines what is written in that paragraph is that auditor responsibility is to express an opinion on those financial statements, whether they are materially misstated. So, that is the auditor's responsibility. Auditor responsibility is not to prepare the financial statement, which is the management responsibility written in the management paragraph. He also writes the auditors that what he has done, he has followed the certain audit procedures, and he has conducted this audit as per the auditing standards issued by the Institute of Chartered Accountants of India. He writes on that one. What those standards say, that he do the risk assessment, he do the test checking of this transaction, he verifies the amount, he verifies the disclosures, whatever is made in the financial statements, and he collects the evidences from to form an opinion. When he writes that, and after that he writes that these are after doing this all exercise, he has collected a sufficient and appropriate evidence which enables him to express an opinion. Dear student, you must be wondering that what is the need of writing this again here? Auditor is supposed to follow the auditing standard. Auditor is supposed to do the auditing as per the auditing standards. Why write? Just to bring a transparency in the audit reports, to build up a confidence in the user's mind that he followed this exercise, he did this exercise before expressing an opinion. He is not expressing his opinion on the basis in the year, or he has not done any work. He has done this work, and after that he is expressing an opinion. That will give a confidence to the reader of this report. And that is also the commitment of the auditors. It puts in the responsibility on him that he has conducted an audit as per the auditing standard issued by the Institute of Chartered Accountants. He also writes in that one that he has made a risk assessment, and for that purpose he has considered the internal control of the company. But considering the internal control, he has considered only for the purpose of following a particular audit process. He has not tested the internal control for the purpose whether it is effective or not effective, and he is not expressing an opinion on the internal control. Dear student, recently the Institute of Chartered Accountants has made additions or modification in this paragraph, and that what is written there, that he has not followed and he has not tested the internal control effectiveness. He has not conducted and he has not made an assessment of the internal control with the view to express an opinion on the effectiveness of the internal control. So, he has to expressly written that this testing of internal control, making a risk assessment, is not for the purpose to test whether the internal controls are functioning, operating effectively or not. That is not the object of this audit. Object of this audit is to express an opinion on the financial statements. That's the auditor's responsibility. After that, he expresses his opinion. he expresses his opinion. And opinion is that whether as per generally accepted accounting principles, these financial statement he identifies, especially the opinion on the three financial statement, financial balance sheet, profit or loss, cash flows. He has to separately he writes whether they are true and fair or not, as per the generally accepted accounting principles in India. And that is the accounting and the disclosures made as per the provisions of the Companies Act. This is the accounting framework. This is the financial statement framework under which he is making an opinion. Do you understand? When he is saying that it shows the true and fair view with respect to the generally accepted accounting principles in India, and if that's a financial statement framework. If he is required to make a report and to make an opinion whether this financial statement shows a true and fair view as per the international accounting standards, the auditor may say no, it does not so, but for as per the Indian it may say yes. So the true and fair statement is not an absolute one. It is with respect to certain accounting framework, and if that framework is followed, and then if the auditor says my opinion on as per this generally accepted accounting principles, this is true and fair. If that framework changes, then his opinion may also change. So that's the auditor's opinion, and he expresses an opinion separately on balance sheet, separately on profit or loss, and separately on the cash flows. Do you understand? The next paragraph is about the other reporting responsibilities. And what is that other reporting responsibilities? In India, there are certain requirements, reporting requirement under the Companies Act. At present, there are section 227(3), which talks about that auditor has to report on these points, and whether he has obtained all the information, whether he has these financial statement tallies and agreed with the books of account they have maintained, whether they comply with the accounting standard prescribed under section 211. These are the certain points which he has to, where he has to express his opinion as per the Companies Act requirement 227(3). So these are the other reporting responsibility as per the law, and it's for if you are reporting under the Companies Act. If you are reporting some under the US GAAP, you are reporting under the IFRS, these reporting requirements are not there, because you are not reporting under the Indian Companies Act. The section 227 also says that there are certain points which is say that if the auditors feel that they are in negative, they have to be reported. Whether the loans has been shown as an advances, if it is not met, please report it. And if it is okay, there is no reporting on that the answer is not in negative, then they need not to report it. There is a reporting requirement under section 227(4)(a), CARO report, where the auditor has to report, express his opinion on 21 points prescribed under CARO. So these all comes under the other reporting responsibilities, and they have to be reported as per the requirement of the Companies Act. Now after that, the auditors has to sign the report. He has to put his signatures on it. Requirement prescribed under these auditing standards by the Institute of Chartered Accountant, that he has to sign the report if he is signing on behalf of some firm, auditing firm, suppose AB and company. If he is signing on behalf, if he has got a certificate of practice and he has not registered himself as a firm, but he is signing an individual name, then he can write his name, his membership number. But if he is signing as a partner of the particular firm, accounting firm, auditing firm, then he has to write the name of that firm, registration number of the ICA of that firm, and then he has to write his name, his membership number, and as a partner he is signing. So that way the signature has to be made. So this is the requirement of firm registration number also is made, that is called FRN number, and that has to be put in the firm names. Along with the firm names, what is the registration number of this firm? The place of signatures has to be put, whether the auditors has signed this report in Delhi or in somewhere else or in Mumbai. So place and date of signature has to be put in the auditor's report. Dear student, this date and place of signature, date is very important. Why it is important? Because we have a requirement about the subsequent events, and what that auditing standard, which I have already discussed, what that auditing standard says, that auditor has to consider all the important events up to the date of signing of the reports. If you are signing the report for 31st March 2013, on 30th June 2013, the events, significant events which happens from 1st of April 2013 up to 30th June 2013 have to be considered by the auditors when he signs the reports. And dear student, you must be watching and must be observing that whenever the auditor signs the report, he signs of the same date when the board of directors has passed those accounts, when they are approved. As soon as they are approved in the board meetings, because auditor has already conducted an audit, and he signs on the same date on the management signs those reports, those financial statements. And you must be thinking and must be have a question in your mind, why he signs on the same date? The importance is, the reason is that if he signs, suppose the board of directors has passed a financial statement on 21st of June 2013 and it is given to the auditors for their report, and he gives a report on 30th June 2030, then he has to see the 5 days, during that 5 days any important events has taken place. He has to consider the minutes of the board during that period, committees and everything. He has to consider, is there any important events which has taken place from 25th of June to 30th of June. Because he is responsible for all subsequent events, he has to report any material subsequent events, significant subsequent events which has taken place from the closing of the from the reporting date up to the date of signing the report. Therefore, whenever, because the up to 25th of June, he has taken a representation from the management that there, between this date they have considered it while preparing the financial statement. From 1st of April 2013 up to 25th of June 2013, he has taken a representation from management that though all significant event between these two dates has been considered while preparing these financial statements. But he has no representation from the management. Management has not given him an explanation whether there are events between 25th of June to 30th of June. He has to follow that audit procedures. And just not to follow that audit procedure for that 5 days, the auditor signs in the same date when the board of directors approved the financial statements on 25th of June itself. And therefore, his liability is restricted up to 25th of June events. No doubt. As per that subsequent events auditing standards, there are subsequent discoveries, but not the subsequent events. He is not responsible for any significant subsequent events which took place after 25th of June. But if there are subsequent discoveries then certainly the auditors has to consider those subsequent discoveries as per that auditing standards of subsequent events. So that's the importance of the date attached in the auditor's reports. The place he has to write, and that will be place and the dates, and that's why this is the basically these are the contents of the audit reports.